You don't want to be lazy.
All right, guys, I'm going to go ahead and start. So as you can see, I'm trying to sign into Google Drive because I had some infinite wisdom to share with you all about the CPA exam. You can actually find it on the share folder that I sent you all. And I was going to bring it up here and talk through this because I do that at the beginning of every CPA exam session. And for some unknown reason, I can't log into Google Drive here because you can see it's just rotating like that. It's mesmerizing. You can just do that for the next 2 hours and just watch that.
Well, hopefully pass after that.
Oh, that'd be great if you pass. Yeah. So if you have access to that, the file that I sent you, you can bring that up, and I'm just going to talk through it real quick. Real quick, I wanted to talk to you about some of the things that I've learned over the time that I've done this. And I've been doing the CPA prep now for 10 years. We've got a rich history of doing it. Something that really stuck with me, you heard me talk a lot of trash about Alan Davis, all right? And he's going to live on beyond his reputation. He's been retired now for, I guess now it's almost 5 years, and I still talk about him, which just shows just the underlying, I don't know what the adjective is, but feelings that I have for him. But he actually had some really good advice. He was kind of when he was in charge of the CPA prep when Truman State started its successful run and started doing all these incredible things. And his advice, this is actually a quote from an email he would send out. He said, "The secret to the CPA exam is practice, 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 and then do some more practice." So apparently you need to practice. It's because you're not learning new material. You already know about like-kind exchanges, bankruptcy, leases, consolidation, auditing standards. Your objective this summer is not to master new material, but rather to learn a skill by that taking the CPA exam, and the best way to learn a skill is in practice. So the CPA exam is not trying to prepare you. You taking that exam is not going to judge you on how strong of an accountant you are in certain areas. You may say, well, I rule at auditing, Dr. Barnes said so. That'd be great, but you could still have trouble in the exam because the whole goal here is to be able to take an exam, not to be a great auditor. Okay, I think that any number of you can go out and be successful accountants in whatever fields you choose, and I have no doubt about that. The goal here is to bypass that and say, I need to learn how to sit for this exam. So the goal that I'm going to share with you over the next 3 study sessions are some of the approaches that I think you should take when you're answering questions. And there are 6 multiple choice questions. This is actually used to be the questions that I walked through in previous semesters, or previous years, not previous semesters, previous years, that kind of give you some of my thoughts on how to answer questions or how to approach questions. So if you're struggling with a question and you just want to figure out, well, how would Dr. Barnes approach a question in this area, or how to approach that question, you may want to reference to those 6 items. It's a series of multiple choice questions, and hopefully we're going to be talking about multiple choice questions and TBSs, but I do give you some very in-depth insight into what my thought patterns are in these areas. So something to know about the CPA exam, specifically with auditing. We've talked about it in other classes that you all had with me, but something called Bloom's taxonomy to wages is ever present on the CPA exam. So Bloom's taxonomy basically says there's different levels of understanding or knowledge that you can have within a skill area. Remembering and understanding is kind of the basic one. That's called memorization. And it's something that I'm sure you're very familiar with. You probably had to say, all right, well, I know Dr. Barnes is going to test me on those COSO framework components, so I've got to memorize. Was that control environment, control activities, losing control, whatever. Yeah. So yeah, that's an example of memory and understanding, and that is very present on the auditing section. It's about 30 to 40% of the auditing section. So you will have to memorize some stuff. That being said, application is probably the most pronounced. Application is taking the information that you've learned and applying it in given scenarios. So that's another 30 to 40%. I would say that it's probably more important for application because application will be more relevant to the task-based simulations as well. So being able to apply information that you've learned is really, really important. Also, when you're talking about multiple choice questions on auditing section will generally be one of 2 areas. They're going to be either remembering and understanding, so memorization, or application of that information. When you get task-based simulation, they have the ante quite a bit, right? Task-based simulations are grueling in every section of the CPA exam, especially auditing, because they will test you on analysis, which can be 15 to 25% of your exam, and evaluation, which is 15 to 25% of your exam. So analysis is basically implications of the situation, and evaluation is how you would actually, what would be the proper approach to a situation. The those are kind of the levels of Bloom's taxonomy, and they get increasingly more complex. Auditing in many respects is going to be the most challenging of this, because this is the only section of the CPA exam that actually includes evaluation questions. It will ask you for your perspective on an issue and expect you to give you the same perspective that the CPA or AICPA has come up with, which is kind of a challenge. So it can be a little bit daunting. That's one of the reasons I say auditing can be a little bit problematic if you're not prepared for it. So that goes back to that key that practice that Al was talking about. I will say one thing that's really important, and this reiterates things that I've talked about in my classes previously, and you should remember. I do think that knowledge of particular topic is really important. Some situations you can just memorize mnemonics. You can memorize acronyms. Okay, so like example is we're going to talk a little bit about a mnemonic for staffing on or engagement planning considerations, and there's a mnemonic in the book called Help Me. Okay, I think that using that mnemonic would be fine because that's a very marginal area that you're going to not have a lot of testing. If you have one multiple choice question, that will probably be it. So memorizing a very simple acronym for that's great. So it's a very low pressure area. Acronyms are fantastic, and Becker has a lot of them. If it's a high volume area, something where you're going to see a lot of questions on, you do need to spend a lot more time in learning it, and the acronyms are not going to be as helpful. So the acronym for the COSO components is CRIME, C-R-I-M-E. I think that acronym is garbage, first of all, because it takes the components out of sequence. And secondly, you just knowing the names is not sufficient to actually know what the components of the COSO framework are. So when it comes to knowledge, for the really important stuff, the stuff that you see repeatedly, you need to know this information, to actually know the names of it and understand what the basis for it are. And so that's consistent with the way that we've learned it back from auditing. Probably more important is that when we talk about understanding of these topics, high level understanding is far more important than just detailed understanding. You're going to encounter a lot of questions on the CPA exam itself where you're going to be like, I don't remember covering this in class. And you're going to panic and you're going to say, oh my gosh, Dr. Barnes would be so unhappy with me. I'm sure we probably covered this, but I don't remember it. That's fine. Every single person who's taken the CPA exam or test for the CPA exam has encountered that. It is not impossible to answer a question that you don't know the answer to. You're very intelligent. You spent the past 4 to 5 years in school learning this information, learning approaches to complex topics. If you encounter something that you don't know the answer to, use your best judgment and approach the question in a rational manner. And if you have a high understanding of the topics, like say, for example, they ask a question about one of the sections of the audit reports, and you're like, I don't remember that section. It was difficult. Say, all right, what do you know about audit reports? What information is contained within audit reports itself? If you approach it from that perspective, it becomes a lot easier to frame a question. So keep in mind that high level understanding is far more important. You've probably heard me say this name before. Tim Hudson, he was my GTRA back in 2019, I don't remember what year it was. But he was last Elijah Watt Sales Award winner here at Truman State, which basically means he scored top 1%. And if you ever meet Tim Hudson, you'll understand why. The guy's a machine. He used to intimidate professors with how smart he was. I considered it a great honor when I actually asked him a question on an exam he didn't know the answer to. He actually had very good advice for this approach or for this exam. He said, study the book. And the reason I bring this up is that there's a lot of videos and a lot of PowerPoint slides on the new version of the exam. The way they used to do it, it was terrible. Okay, it was tedious and terrible. But they used to actually walk through the book, and the people who would walk through the stuff would say, underline this passage and circle this passage and write a note over here. It was boring as hell, but it was very effective. Okay. I do think that the new versions of the videos that actually walk through the PowerPoints and summarize the information are very good, but don't abandon the book altogether, because the book is basically kind of the gospel for everything that's going to be covered on the CPA exam. So if you're struggling on a concept, if you're struggling on an idea, open the book, read what the book has to say about it. They are very thorough. They've been doing this for almost 40 years now about preparing for the CPA exam, and they update it very rigorous. So any information that you need will be covered in the book. Also, on that document that I sent you, there's actually a YouTube video. It's a little bit dated. It's like 5 years old, but it's actually 3 of my former students talking about their preparation for the CPA exam. All 3 of them scored above 90 on the audit section. So they give you some good advice on how to approach this information. Also, one thing is you're preparing for the exam, you're going to sit for the mini exams and you're going to be like, okay, I know this, I got this rocked down, and you're going to sit and it's going to say 60%. And you're going to be like, oh my gosh, I'm completely, totally miserably failing. I don't want you to panic if that comes into the play. First of all, it's important that you understand that getting low scores on the preparation exams is not a bad thing. That means that you focus on the things that you need to know. Secondly, keep in mind the 75 that you have to score in the CPA exam is not a percentage estimate. The scoring actually has to do with some sort of weird algorithm Becker used. I would say it's around probably 75%, but there's the scoring is just arbitrary according to how Becker approaches a particular problem and how they weight different questions. So you could actually score 70% correct and still get a 75 score on the exam. So I don't necessarily lean on percentages. Finally, have you all heard of the term called the Becker bump? Has that term come up with you? So the Becker bump is this concept that Becker questions are a lot more difficult than the ones that you'll encounter on the CPA exam. And in general, that's going to be true because Becker is trying to do secondhand what the AICPA is doing. The AICPA has a rigorous testing process for the questions. About 30% of the questions you're going to answer on the CPA exam will not even be graded. Okay, they will not count towards your grade. The reason why is they're testing them for future exams. So they actually go through a rigorous process to try to make sure that the questions are reasonable and sufficient for the CPA exam. It's not like Becker that basically takes unused questions or old questions and puts them into the material. Or me who just basically puts on an exam and said, oh, that question was too hard. All right, I'm throwing it out. Okay. AICPA has a very rigorous testing process. Becker does not. They use old questions, and some of their questions are frankly garbage. In fact, there's a question that we're going to talk about today that I'm just kind of like, this was a friggin' trick question. I don't care how much they tell you it was not a trick question. It was. All right. So the Becker bump basically says that if you score within like about 5 to 15% of what your target is, that's probably pretty good. And they show what there's actually a spreadsheet. I put it in the document. It's a really old spreadsheet. It was like 2022, but it actually shows what people scored on their prep exams in the Becker and what they scored on this on the AICPA, the CPA exam itself. And the spread is anywhere from 5 to 15 points depending on the exam. For auditing, it's generally going to be higher. It's usually in the 10 to 15% range. So I'm not saying that you shouldn't aim for 75 on your practice exams. I'm saying that if you don't quite get to 75, that doesn't mean the world is coming apart. Okay, it doesn't mean the world's falling apart. I will say that one of the things that you should very heavily focus on, and let's see if I can find it here. Yeah, I'm gonna. So, go home. All right. So if you look here. There's a piece of information on the front page that says, how do I become exam day ready? Your goal for preparing for any one of the sections of the CPA exam is to become exam day ready. If you hit that goal, if you hit that goal post, your chances of passing the exam will skyrocket, go infinitely higher than if you don't hit it. I think if you can get 100% on all this, great. Okay, if you get 100%, fantastic. But if you can get to at least 80% on all this, you should feel pretty good about where you stand. Becker actually shared their data to us, and take it for what it's worth. And it is not necessarily empirical data, but they said that people who are exam day ready, about 94% of the people who are exam day ready pass the CPA exam on that try. Okay, so if you're not exam day ready, I'm not saying you won't pass the exam. If you are exam day ready, I'm not saying you will pass the exam. I'm saying that this should be your goal because statistically speaking, you are more likely than not to pass the CPA exam if you are exam day ready. That's a lot of work. I realize that right there. Trust me, I remember studying for the CPA exam. It was a full-time job for me for about 3 months. Okay, you guys are doing it in a much shorter time frame, so it's probably going to be more of a full-time job. So keep that in mind. And then finally, the last thing I said, if you have any questions, any insights, if you have stuff you want to cover, I'm happy to cover stuff in these meetings. You can send me questions or topics if there's something that's confusing that you're concerned about, that you're not so sure about how to approach it. I will talk about it here. I will also happy to set up meetings with you, either Zoom, office hours, phone call, whatever you need. Our goal here as faculty over the summer is to make sure that you feel prepared for the CPA exam and you walk in confident that you can do what needs to be done. Okay, so feel free to reach out to me if you need to. All right, any questions? All right, well, that's it. Have a great day. Joking. All right. Let's go ahead Let's start this out. So here's what I'm going to do. I've got a couple of things. I'm going to talk about audit 1 and 2. So I will say module 1, or sorry, section chapter 1. Chapter 1 is audit reports. There's a lot of area I want to cover there, and I want to make sure we get plenty of time to that. Section 2, I'm going to put I'm going to push up that off to the end and cover whatever we need to do. Section 2, for the most part, from what I could tell, everybody's looked pretty good. There was not a lot of just like consistently poor performance in any areas. There were certain questions that were challenging, but for the most part, it looked like everybody was pretty solid in that. Section 1, which is the audit reports, so engagement quality standards and audit reports. That was kind of where the area I thought that needs the most work. So I want to spend some time talking about that. And I think the first thing I want to talk about is I want to talk a little bit about audit reports. Okay. Because obviously this is very important. There's an entire section dedicated to audit reports. And the question has come up, what do you need to know for audit reports? Now, the simple answer to this is as much as you possibly can, okay? They give you example reports in the Becker manual, and there's example reports online that you can look at too if you don't looking at the Becker reports. I do know that I've heard that statement before that the Becker reports are hard to read. If you want to, you can go online and look and see what the reports are, the standard unmodified AICPA report, audit reports. You can use that if that's more of your preference. But the answer is if you can memorize that whole thing, then you should feel really good. Now, I realize that is a lot to ask because the current standard unmodified report is like about 4 pages long, okay? So I do want to talk really quickly about that. First of all, you need to know what's important to be able to understand. Okay, let's go on. Assuming nobody else is coming in, so we can close the door. So it's important to know what it is that you need to cover. And the answer is most of the body of the report is going to be relevant. The ancillary sections, which is going to be near the end of the report, that contain a lot of various random details. That's not nearly as important. Like you don't need to know about litigation and other matters, the sections near the end. What you would need to know is you'd want to know the information about what goes in the opinion section, what goes into the basis for opinion section, and what goes into the scope, things along those lines. It's not so important that you memorize all this information. If you feel comfortable doing that, that's absolutely great. Okay, I think that memorization does have its merits in this particular area because it's very hard to forget the contents of that. At minimum, what you do need to know is you need to know what the language is that's used, because the language that's used is called boilerplate. Remember hearing that term before in my other classes? Boilerplate is basically saying that people use this language every single time in an audit report. So you're going to see that terminology used in every audit report that's ever issued. So you need to know what that terminology is. So here's my recommendation for you. If you want to memorize the reports, great. Okay. If you're like Dr. Barnes, I've got a life, then I respect that too. If you don't want to memorize that, what I would do is I would say, make sure that you read through the audit report on a daily basis. And by read through it, this is going to sound silly, okay? This is going to sound silly. I don't mean put it in front of you and just scan. It's like reasonable assurance. I think that you should take it and in a slow, measured pace, read through every word like you're narrating an audiobook, okay? The reason why is you're trying to familiarize yourself with the language that's used in the audit reports. And the only way to do that is to look at the audit report time and time again and look at that information consistently. There's a lot of questions that are covered here in Becker that say what information is contained in the audit report. And the only way you can answer those questions is to know what information is in the audit report. Some of it is going to be explicit, some of it's going to be implicit, so you need to know the difference between that. There's questions on that that are very, very pronounced that say, all right, is this wording used in the audit report? And you should be able to answer that yes or no. It's not necessary to memorize the report to know those. All it really requires is 10 years of teaching this information. So I don't have the audit report memorized, but I can tell you right now, I feel pretty comfortable that I can recognize information that is in the report or not, because I've looked at it so many times. That's where you need to get within the next few weeks, is you need to get that exposure. And so I think the best way to do that is to sit down and take about 10 minutes out of your day and just read the audit report out loud. It's going to seem silly. It's going to seem just a tedious waste of time. But I do think that it will pay off in the long run because you will remember the sessions where you walk through the report and say, okay, I remember that wording when I was reading through it. Okay. All right, so let's go ahead and I'm going to start with A1, and depending on what time looks like, we may take a break and then we'll move into A2. But I'm going to start working through some multiple choice questions, and then if we have time, then we'll do some task-based simulations. All right, so first thing we're going to talk about is 2298. If I can get the new number lock on, 2298. All right, so I kind of laughed when this question came up because this is actually the very first question that we had for CPA prep and seminar on auditing. Okay. And so, yeah, that was kind of funny. So, yeah, we talked about this. Actually, no, so this is not a question. This is the next question. My apologies. My apologies. The next question. So this question came up, and this one is a little bit more challenging. This is one that came up. I actually have this in my 6 documents that I provided you all. This is one of the questions in those 6 documents. So it says, which of the following provides the most authoritative guidance for an auditor of a non-issue? Okay. So let's go ahead and talk about the standards for non-issuers. So when you took 417, we focused very heavily on the PCAUB. PCAUB is for issuers. Okay. That is the regulator for issuers, which may or may not be in existence by the time you finish the CPA exam, depending on how the current administration operates. But the PCAUB governs standards over companies that file on exchanges within the United States, that are publicly traded on exchanges in the United States. For non-issuers, that is going to be the Audit Standards Board, the ASB. The standards issued by the Audit Standards Board are called Statements on Auditing Standards. Okay, so you heard me use the term ASB all the time, but it's important to remember that the ASBs are not the names of the standards, that's the name of the body. The name of the standards themselves are the SASs, the Statements on Auditing Standards. And you can recognize them because they usually are characterized by AU-C or AT-C or AR-C. I don't remember what the vernacular is. So they have different sections depending on what the topics are they're covering. Okay. And it's also important to note that the Auditing Standards Board, they are a subset of the American Institute of Certified Public Accountants, the AICPA. So now what that means is that you're more likely to not see questions about non-issuers than issuers, simply because these are AICPA rules, and it's an exam being administered by the AICPA. So keep that in mind as something in the back of your head. So which of these would be the most authoritative guidance? All right. So let's just go through the answers. Specific guidance provided by an interpretation of a statement on auditing standards. Okay. So this says specific information related to a standard that's related to non-issuers. Okay. That seems really strong to me. So it's probably going to be A, but let's look through the rest. An AICPA, an audit and accounting guide that provides specific guidance with respect to accounting practices in a client's industry. So this is basically a guide saying, here's how you would approach a particular question, but it doesn't answer any question specifically of the interpretation. So it's going to be less stringent than A. The Journal of Accounting article discussing implementation of new standards. This is very, very minimal guidance. We can toss that one out pretty easily. General guidance provided by statement on auditing standards. Okay, we can say general guidance is going to be less detailed than specific guidance that we're going to talk about. I think, yeah, yes, yeah. Just occurred to me that I just realized it's D. Sorry, my apologies. So what I meant to say, D. General guidance or statement on standards. This is going to be a little bit more authoritative. It's going to provide less specific guidance, but it's going to be on the actual standard itself. Doesn't bode well that I clicked on the wrong answer the first time around. But it's going to provide the actual standard itself as opposed to an interpretation of the standard. So that's basically how you would interpret that question. All right, let's go to 3208. Okay, this one is the one that was actually the first question that we actually did for the CPA exam review. Okay. Which of the following best describes what is meant by the term generally accepted auditing standards? Now, I did not cover GAS very, very thoroughly in any of my auditing classes. So let's actually talk a little bit about what's meant by generally accepted auditing standards, because that term comes up and it's very easy to confuse with pronouncements, auditing pronouncements. So when we talk about PCAUB auditing standards and ASB auditing standards, these are separate from generally accepted auditing standards. Okay, generally accepted auditing standards are going to be a series of standards that are more holistic about the whole the overall conduct of an engagement. Okay, and these are going to be more about how do you actually conduct an engagement that's within the standards of protocols within the purview of whatever area that you're looking at. Okay, they talk about things such as professionalism, such as staffing, and generally speaking, quality. Okay, so that's something to remember about generally accepted auditing standards. I do think it's worthwhile if you're a little bit, if you want more information, to go back and look at the generally accepted auditing standards. There are 10 of them that follow three categories. They're general, reporting, and field work. For the most part, they are not going to govern any of your decisions that you make in auditing, but they're going to govern your conduct on an auditing engagement. Okay. So what's the following meant by generally accepted auditing standards? Pronouncements issued by the Standards Board. We just actually said these are separate from those. Pronouncements issued by the Standards Board, those are auditing standards, but they're not generally accepted auditing standards. They're basically considered to be standards relative to that Standards Board. Rules acknowledged by the accounting profession because they're universal application. Be very, very careful when you're reading a question like this. This looks like a really good question. Auditing and accounting are considered to be separate in this context, okay? When we think about accounting, accounting are the rules by which financial statements are created and by which financial information is governed. Auditing is the actual process of performing audits over that information. So auditing and accounting are two separate disciplines in this context. Measure the quality of audit performance. We just talked about that. That's our definition right there. So see, and procedures used to gather evidence reports from financial statements. Those are actually just procedures. Okay. So C is our answer. All right. Let's go to 4638. Now, 4638 covers a concept that is really, really tricky. And the good news is by answering this question, you're going to remember this moving forward. But this one's one that comes up a lot. It actually, I'm not going to say you're likely to see a question on it, but you will likely see a topic in this area. So which of the following terms within standards is used to indicate a presumptively mandatory requirement? And this actually comes up a lot when we talk about governmental auditing standards, because they talk about presumptively mandatory requirements within governmental audits. But you see the word mandatory, and what is another word for mandatory? Another word for mandatory is must, and you try to think, well, this has got to be a must, right? I'm pretty sure everybody's kind of like saying mandatory must, okay? We talk about presumptively mandatory. The way that the AICPA defines it, and the way that GAGAS, generally accepted governmental auditing standards, which we're going to talk about here next week, the way they defined it is not something the auditor must do, but they should do in a given situation. Okay, so presumptively mandatory is saying, hey, unless other circumstances warrant doing something more reasonable, this is what you should do. Okay, must requires that you've got to do it no matter any circumstance. Presumptively gives you kind of that actual out saying, we presume that this is the right course of action given no other information. So the difference between should and must, we're going to stick with should. Okay, and again, I realize that mandatory kind of, you want to say must and much. Keep in mind that presumptively, actually, that's a modifier that actually plays relevance here. All right, moving on, we're going to go to section 2, which are module 2, which is audit engagements. Okay, so all right. In order to express an opinion, the auditor obtains the level of assurance about whether financial statements are free from material misstatement, whether due to error or fraud. Which of the following is required in the auditor obtaining this level of assurance? So you're going to see a lot of questions in this area. Is talking about how do we actually make an opinion? How do we actually gain enough assurance to obtain an opinion? When you see a question like this, it's important to be confident enough in your own judgment to be able to actually make the decision. Okay, so let's go ahead and go through the answers and see what's missing or what we need to answer for. So obtain absolute assurance that financial statements are not misstated due to fraud on the part of management. So we see that word absolute assurance, and what do we know about absolute assurance? Absolute assurance is not possible, okay? That's why we use the term reasonable assurance as auditors, okay? And in fact, be very, very careful in any section of the CPA exam where you see something that is an absolute, okay? And I'm not saying absolute assurance, where you use an extreme thing. So must, absolute, anything that uses an extreme descriptor, very rarely is that correct. I'm not going to say it's never correct, but I'm going to say very rarely is it correct, okay? Determine the applicable reporting framework and prepare an adequate description of the framework for inclusion in the financial statements. Okay, so this is something that's probably good, but it's probably going to be done on the part of the client, not the auditor. Because remember, we don't prepare, as auditors, we don't prepare information for the financial statements, the client does, okay? We actually, if we're using a reporting framework other than GAS, we have to disclose that in an audit report. But all we do is we say this is a reporting framework other than GAAP. I said GAS, I meant GAAP, generally accepted accounting principles. Exercise his specific legal powers and authority investigating specific activities of the entity's employees, including management. Okay, how much legal authority do we have as auditors? We have zero legal authority as auditors, okay? So keep that in mind. We're not lawyers, okay? We have no legal authority. We are hired to do a job and give our professional conduct, but we cannot say you're under arrest for fraud, okay? So Plan the work and properly supervise any assistance. That seems like such a boring answer. It's the only one we've got left, but does that seem like a reasonable answer? Sure does. And so that's what we're gonna do. We're gonna plan our work and properly supervise any assistance. So we have to do that. That's actually something required under generally accepted auditing standards, like GAS. Okay, so we're gonna say D. All right. Which of the following statements is correct concerning an auditor's responsibility regarding financial statements? Okay. All right, an auditor may not draft any financial statements based on information from management's accounting system. Okay, so we talked about this back in 417. We talked about it more back in 615. But is this an engagement an accountant can do? Let's just talk about it before we talk about auditors. Is it an engagement an accountant can do? It definitely is. That's a compilation engagement, okay, which is governed according to the rules under SSARS, Statements on Standards for Accounting and Reporting Services, okay? So for a compilation engagement, are we required to be independent? We are not required to be independent for a compilation engagement, okay? So that is absolutely fine, okay? We can actually do that as long as we disclose that we're not independent. That's absolutely fine. The adoption of sound accounting policies is an implicit part of an auditor's responsibility. All right. I think I will say this a lot, but I do want to make sure it's something that you will see a lot on the exam is conflation between the responsibilities of the auditor and the management. So whenever you see the word responsibility, ask yourself, is this an auditor responsibility or is this somebody else's responsibility? So who's responsible for this adoption of sound accounting policies? That's the management. That's the company itself, okay, not the auditor. Auditor responsibilities for audit financial statements are combined in the expression of the auditor's opinion. Is that a true statement? That sure sounds like a true statement. That's our answer, by the way. That's our answer. But let's go with D. Making suggestions that are adopted about an entity control environment impairs an auditor's independence. It's like, we did all this work and we found some problems with your with your system, but we're not going to share this with you because we want to be independent. That seems like a silly thing to say. If you find problems as an auditor, you probably should share those with the client. So D makes perfect sense. Okay. All right. 5709. Which of the following terms identifies a requirement for audit evidence? Boy, it's been a long time since we've talked about this. What are the two characteristics or two qualifications for audit evidence? So it has to do with the quantity of audit evidence and the quality of audit evidence, but we use two different terms for those. Does anybody remember what they are? Sufficiency is one of them. What was the other one? Appropriateness, sufficient appropriate audit evidence. So you're looking for one of those two, and sure enough, we've got B, appropriate audit evidence, okay? Remember those two terms. Audit has to be sufficient. We have to have enough of it to be able to make a proper conclusion. It has to be appropriate. It has to actually be relevant and reliable. It actually has to be relevant to the question we're trying to answer. So, but reasonable.
Yeah.
I got the reasonable assurance, but so this is actually referring to a specific requirement, and those are the two requirements that we talk about with respect to audit evidence. But reasonable does have it. There is a justification for that. All right. The good news is for module 3, I didn't see any problems, so we're not going to talk about the stuff in module 3 that's forming opinion. Apparently, we did a good enough job working together that you guys are pretty good on how to form an opinion. But I do want to talk about the different types of opinions can be issued because there did appear to be some problems there. So let's go ahead and move on. 2764. When financial statements contain a departure from US GAAP because due to unusual circumstances, the statements would otherwise be misleading, the auditor should express an opinion that is, all right. This is something I do miss Tim Garrity. Now, he doesn't do the audit section anymore, but he used to be the Becker representative that did audit and FAR. And he was a personality that was larger than life. He and Pete Rillerto, and they were a lot of fun to talk about. But Tim Garrity used to tell the story about how in his time of doing auditing, which was like 40 years, he had never encountered this. But GAAP actually contains provisions that if it would be misleading to use GAAP in a particular situation, that it's okay for a company to actually use something, rules other than GAAP. So GAAP actually says, look, if you use our rules, but it would lead to misleading financial statements, don't use our rules, okay? In auditing, basically what that means is that if they can justify the departure from GAAP, that is cool, okay? And this is basically saying this is a justifiable departure from GAAP. So if it's justifiable departure from GAAP, the answer is we don't change anything. We say, hey, that's cool. As long as you can justify it, we're going to issue a clean opinion, non-modified opinion. This actually comes up quite a bit on the CPA exam, even though this doesn't happen a lot in practice. It very rarely happens in practice. For some reason, they like to ask questions in this area. So keep in mind, if it is a justifiable departure from GAAP, it's okay. Okay, it is okay. I held up like that. I meant okay. Okay. It's been so long since I've said okay. All right. 5842. All right. Client decides not to make an auditor's proposed adjustments that are collectively not material. And wants the auditor to issue the report based on the unadjusted numbers. Which of the following statements regarding the financial statement presentation? So questions like this, one thing that I would encourage you to do is try to answer the question before you read the answers. And the reason why is because the answers are going to try to persuade you in a certain direction that you normally wouldn't go. So let's read through this question and let's talk about it before we look at the answer, okay? Practically approach adjustments that are collected, not material. So we have non-material adjustments, all right? So if we have financial statements where the errors are not material, there's misstatements, but they're not material. How do we feel about that as an auditor? I'm cool with that, okay? All I care is the financial statements are free from material misstatements, okay? So I'm cool with that. I just like, hey, that's fine with me, okay? So we say, hey, here's some adjustments that you should make. The auditor, the client says, we don't want to make those. I said, that's fine. They're not material anyway. We don't tell the client that, but we're just going to say, that's fine, okay? They don't want to make the adjustments. We were going to say, all right, well, those got material adjustments anyway, so sign off. That's it. That is all there is to it. If we look at this question without looking into the answers, that's how we'd answer the question. Now let's find the answer that best fits that question. Financial statements contain adjustment statements that should result in qualified opinion. Is that what our answer was? No, okay. It's not A. Financial statements are free from material misstatements. Is that true? Yes. And no disclosure is required in the notes of the financial statements. This is the one where I think people got thrown off because they looked at D and say, you know what? We should probably cover our bases, we probably should cover our bases and say, let's go ahead and make notes in the financial statements that there were some adjustments that auditors, no, stop trying to do things that I never told you should do, okay? All right. We're just gonna say B, okay? There's no disclosure, and we don't even as auditors make disclosures in the notes of the financial statements. Remember, the financial statements are the client's ground. The only thing of ours as auditors that goes in the financial statements is our audit report. That's it. All right. So no disclosure is required in the notes of the financial statements. So B is our answer. And this is one of those ones, like I said, if you read the answers, you start second guessing yourself, okay? Figure out your answer and stick with it. That's be confident. Have assertion there. Yeah, okay. All right. 14968. All right, block is EPA versus violated an audit of a non-issuer. Draft an audit report that contains an unmodified opinion. National block made the following representations of audit opinion compared to financial statements. All right, remember I was talking about how you should sit down with that audit report and read through it every single day. You should read through it. It says, okay, in our opinion, the financial statements are free from material. Remember I said you should do that? This is one of the reasons for that is questions like this, because they're asking, is the wording implicit or explicit on the report? Now, I'm going to tell you right now, for the new version of the audit report, I could not memorize and spew that back out to you. I'm 100% confident on that, okay? But I have looked at the reports enough that I know what terminology is and is not in the report, okay? Consistent application of accounting principles. Accounting principles are talked about in the audit report, but it does not use the language consistent application of accounting principles, okay? It just says that the financial statements were prepared on a basis or on GAAP or a basis of accounting other than GAAP, okay? So it doesn't say consistent accounting application of principles. So if it doesn't say that word exactly, that's going to be implicit, okay? Examination of evidence on a test basis, is that wording used in the audit report? You betcha. That wording is exactly used, word for word, it's used in the audit report. So that's explicit. So implicit and explicit, our answer is A. Again, the only way to answer this question is to get familiar enough with our reports. And it seems like such a tedious chore. I'm not asking you to memorize the reports, just become familiar enough with them that you can recognize stuff like this. All right. Modified opinions. Under which of the following circumstances would the expression of an adverse opinion be inappropriate? Okay, so I think most everybody in this room has knowledge of this area, but let's just reiterate the opinion types, okay? There are 4 opinion types, and there are situations that we use each of the 4 opinions. So the first one's going to be our unmodified, or in the case of public companies, unqualified opinions, okay? Unmodified and unqualified are the same thing. It just depends on when we're using them. Unmodified is for non-issuers, unqualified is for issuers. And they basically say that financial statements are free from material misstatement, okay? Then we have qualified opinions. Qualified opinions is the same for both, okay? Qualified opinions say, except for 1 or 2 small things, the financial statements are free from material misstatements. That means there is a material misstatement or multiple material misstatements, but we do not think that they're significant enough to result in extreme in opinion. The 2 words you should look for in the qualified opinion are except for. Those are the 2 words that you will always see, okay? And they constitute issues that are material, but not pervasive. Now, there are 2 ways that you can issue a qualified opinion. The first of these is you can issue a qualified opinion due to a departure from GAAP or a departure from whatever accounting principles they're using, okay? So departure from the accounting rules that they're supposed to follow. There's also scope limitation, where we as auditors were not able to do our job, okay? And that's going to come up very prominent here in just a second. All right, now the extreme opinions, the first one's called adverse. Adverse basically says that there's a pervasive departure from GAAP or whatever accounting principles are being used, okay? They did not follow the rules, and as a result, there's a pervasive misstatement, all right? That's the only situation that can result in an adverse opinion, okay? So that's what we're talking about here. When should the expression opinion be adverse opinion being appropriate? It has to be something that is not a pervasive departure from GAAP or a pervasive departure from accounting principles. The other one is a disclaimer for opinion. A disclaimer of opinion is going to be used in scenarios where we've got a pervasive scope limitation, like a significant part of our job we cannot do because of whatever reason. Like it is significant enough that we can't actually render an opinion. Okay. So when we talk about, I probably should go back. Adverse opinion, the language we use is the financial statements do not present fairly in all material respects the financial position of the company. Financial statements are not free from material misstatement. Okay. And then in a disclaimer opinion, basically all that says is we're not going to issue an opinion. We are not issuing an opinion. That's all there is to it. Okay. Disclaimer opinion can come up in 1 of 2 ways: pervasive scope limitation. There's also a second one that's going to be occasionally relevant. It might come up that you should probably know about. If the auditor is not independent from their client, they cannot issue an audit opinion. Okay. So let's say that my brother opens up his chain of restaurants that he's currently right now doing private chef work. He's doing private chef work, and he decides to go public with it. And he says, "I want you to audit my company." I said, "Well, I can audit it, but I can't render opinion because you and I have a related party relationship, and I'm not independent from your company. So can I audit? Yes. Can I issue an opinion? No." All right, that's the other situation. Also, something that you might encounter that I want to, this is ancillary to this discussion, but I want to make sure you know. You may see this come up. Disclaimer of opinion can be used in any situation in which an opinion is not rendered, okay? Later on, when we get to attestation and assurance services, there's going to be that term used a lot because there's going to be certain types of services that are performed where we as accountants do not issue an opinion. In other words, we disclaim an opinion, which sounds really bad because we're talking about it right now in the context of we're disclaiming an opinion because something bad happened. In situations where we are not authorized to issue an opinion, we would disclaim an opinion, and that's not a bad thing. That's just the nature of the job. So keep an eye out for that. That will come up in the future. All right, back to this question. When would an adverse opinion be appropriate? Well, this is obviously looking for something where there's not a pervasive departure from GAAP, okay? All right, so let's go through the answers. Management refused to allow the auditor to contact legal counsel, okay? So this is a tricky one because this sounds like a bad thing, and it is a bad thing because we do need to contact legal counsel as our job as auditors. If management refuses to do that, is that a violation of generally accepted accounting principles? No, it's not. That is something that's preventing us from doing our job. This does not affect the accounting that's in the financial statements. This affects the auditor's job. This is a scope limitation. This would result in a disclaimer opinion. So A is our answer, but let's go through the rest just to make sure, okay? Company issues financial statements and report to present financial position to result of operations, but refuses to issue the related statement of cash flows. We are not Enron. We do not allow this, okay? So yeah, that would be a violation of GAAP. Management does not provide a reasonable justification for a change in accounting principles. If we're going to change accounting principles, then we do need to have a reasonable justification for that. Financial statements do not adequately disclose litigation as probable results in material loss. If it's probable and reasonably estimable, it does need to be disclosed, if not accrued, okay? Which will come up also. So A is pretty clear answer. All right. What do we got here? Okay, sorry. Lose my spot because I get talking and get on rates. 44:37. In which case would an unmodified opinion not be appropriate? Okay. When a choice an unmodified opinion would not be appropriate. So this is really tricky. The real wording is they're basically saying, when should we not use a clean opinion? When should we not issue a clean opinion? So what about if there's a justified departure from GAAP? Is a clean opinion okay with that in this situation? Yeah, absolutely. Okay. There's an unjustified departure from GAAP, but it does not have a material effect on the financial statements. What do you guys think about that? It's not material. We don't care. Okay. We're fine. Just we're going to let a material related party transaction has occurred and has been accounted for appropriately, but it has not been adequately disclosed in the financial statements. What do you guys think about that one? That is definitely a violation of GAAP right there. All related party transactions have to be disclosed in financial statements under generally accepted accounting principles. This is a violation of GAAP. As such, we cannot issue an unmodified opinion. So C is our answer, but let's go to D. There's a change in accounting principle that has a material effect on the current year financial statements. Is this a misstatement if it's a change in accounting principle? It is not a misstatement. It's just a change in accounting principle, okay? Now, would we have a responsibility as auditors if we have a change in accounting principles with material effect? Yes, we would say this probably affects comparability from the one period to the next. We would have to probably include an explanatory paragraph or an emphasis of matter paragraph, but it would not result in a change in our opinion. So D does not result in a change in opinion because it's not a misstatement, okay? It's just a change in principles. So C is our answer. All right. Move on to some more modified opinions. See the enthusiasm in your eyes, and we're just going to roll with it. Okay. Auditor decides to issue a qualified opinion on any financial statements because of major inadequacy in its computerized accounting records prevents the auditor from applying necessary procedures. What does that sound like to you all? Auditors trying to do their job and they can't do their job. What do we call that? Scope limitation. Yes. The opinion paragraph of the auditor's report should state that the qualification pertains to, what do we got? So you see the things, let's go client post scope limitation. Okay. So we're looking at C and we're just kind of like saying, well, Dr. Barnes just said it was a scope limitation. That's what we're going to do. That's not the question that's being asked. Is this a scope limitation? Absolutely. Okay. Do we ever use the term scope limitation in the audit report itself? No, the terminology is not used in the audit report. So what would we be concerned about? What about the possible effects on the financial statements? Keep in mind that the opinion is all about whenever we have a problem, what would be the effect on the financial statements? Would they be misstated or not? That's the actual terminology of the language that's used, and A is our answer, okay? So 2 points to note here. You notice I pulled out the scope limitation because I want to make sure everybody knew it was a scope limitation, but be very aware this is about the language that needs to be used in the audit report. So again, making sure you know what does the language look like in the reports. Really important. All right, 14981. Audit report under U.S. auditing standards refers to a scope limitation that is material but not pervasive, contains the word in our opinion, except for the below mentioned limitation of an audit report. This is considered a what? Okay. Now this one's kind of a silly question, okay? But let's just go ahead and go back to what I just said in the previous question. Make sure you know the wording in the audit report, okay? So is this correct wording to be used in the audit report? In our opinion, except for the below mentioned limitation on the scope of our auditation. Well, we just talked about this in the previous question. What was the language that was used? The possible effects on the financial statements? That was the language we used in the previous question. It's not in this question right here. So is this an example of correct wording? This is not. So it's an example of inappropriate wording. Okay. For the same reason we just talked about in the previous question. Okay. This next section that we're going to talk about, I would not worry too much if this seems like overwhelming. We're going to talk about emphasis of matter, other matter, and explanatory paragraphs. So clarify just what to note. Okay. Explanatory paragraphs is the terminology that's used for public company audit reports. Okay. So explanatory paragraph is anything that goes below the opinion section that's provide any or any additional information about what an auditor is doing, okay? The terminology that's used for ASB audit reports are explanatory paragraphs or sorry, emphasis of matter or other matter paragraphs, okay? Now, when is it a paragraph an emphasis of matter paragraph and when is it another matter paragraph? I'm going to be completely honest, I have no idea. I know that in Becker, they've actually got a chart saying, here's when we use an emphasis of matter paragraph, here's when we use another matter paragraph. When I studied for this, and I still believe this to be true, I completely totally punted trying to actually determine the difference between emphasis of matter and other matter paragraphs. I do not think that it's important. You're not going to be asked a question where they're going to say, is this an emphasis of matter or another matter paragraph? And if you do, I apologize, okay? I owe you the points on the exam for that particular question. I do not think it's relevant, but I do think it's important to note that for the ASB reports, for the non-issue reports, that's what the terminology is used, is emphasis of matter or other matter paragraphs. So let's go ahead and get on to that. Management believes the auditors are satisfied that a pending lawsuit is reasonably possible to result in material loss of $100,000. The lawsuit has been adequately disclosed in the notes of financial statements. However, no loss amount has been accrued related to the pending lawsuit. If management does not make an accrual in the financial statements, the auditor should express a what? So this is a tricky one, okay? So has the client done anything wrong, first of all? So this is actually a question that goes back to financial accounting. What are the criteria for accruing a contingent liability? Has to be probable and reasonably estimable, okay? It looks like it's reasonably estimable because they say $100,000 here, but do they use the word probable? What do they say? Reasonably possible, okay? If it's not at least probable, then we don't have to accrue it, or the client doesn't have to accrue it. They just have to disclose it. So client has done everything correct, okay? Then they've done their job correctly. So we know this is going to be an unmodified opinion. The question is do we need to add an explanatory paragraph, okay? Now, explanatory paragraph is basically for anything that causes confusion or needs any type of explanation. This is a pretty standard GAAP rule that they're followed, and they followed it to the letter. So do we need to add an emphasis of matter paragraph? No, okay, no emphasis of matter paragraph. The client's done everything correctly. We just need to issue an unmodified opinion. Okay, 2448. Auditor would express an unmodified opinion with an emphasis of matter paragraph added to the auditor's report for an unjustified accounting gain. But this is kind of a silly question, by the way. This may be a trick question, though it's not as tricky as one of the questions later. So an unjustified accounting change. So if it's an unjustified accounting change, would we issue an unmodified opinion? If it's an unjustified accounting change, would we issue a modified opinion? No. If it's an unjustified accounting change, that's where we would issue something other than unmodified opinion. Remember, only a justified accounting change can we issue an unmodified opinion. An unjustified accounting change is like, why are you doing that? You're breaking GAAP. Okay. So we wouldn't issue an unmodified opinion. It would be something like qualified opinion or adverse opinion. So this is going to be no. Okay. If this is a matter of paragraph is irrelevant. Okay. This is an unjustified accounting change. What about a material weakness in internal control? Will we issue an unmodified opinion then? If it's a material weakness internal control, that's going to result in an adverse opinion. Okay, it's an adverse opinion. So yeah, this is both no and no. Okay, it's kind of a trick question because you're so focused on whether we should have an emphasis on matter paragraph. It doesn't even matter because neither one of these would get an unmodified opinion. I told you they're tricky. They're tricky. I say no trick questions, but they're tricky. All right. It is not appropriate to refer a reader of an audit report to a financial statement footnote for details concerning what? Okay. Boy, this is kind of a tricky question. Okay. So reader's audit report to a financial statement footnote for details concerning, this is probably going to be issued information that's relevant to the financial statements themselves. Okay. So let's keep that in mind as we're looking through this. If it's something that we're going to be referring to in the financial statements, it needs to be relevant to the financial statements, okay? Are subsequent events relevant to the financial statements? Yes, they are, okay? Those are actually information that's disclosed in the financial statements. Pro forma effects of a business combination, that's actually a subsequent event in itself, so yes, by definition, it would be. Sale of a discontinued operation, that would probably be something relevant to business operations. The results of confirmation of receivables, what is that? Is that financial statement information? That's an audit procedure. We don't disclose what we did in audit in the financial statements, okay? That's not information we would disclose in the footnotes. If anything, that would be in critical audit matters or key audit matters. But even then, that's iffy, okay? It's not gonna be in the financial statement notes, so we're gonna basically say, nope, they don't get to know what we did during the audit. Maybe a general idea, but definitely not in the financial statements. Oh yeah, we just have a few more, then we're gonna take a break. What do you guys say? Good news is, we're gonna do one question on subsequent events, but for the most part, it seems like you guys had this down. All right, subsequent to the issues of the audit report, auditor becomes aware of facts existing in the audit report date that would have affected the report had the auditor been aware of such facts. After determining the information is reliable, an auditor should next issue revised pro forma financial statements to take into consideration the newly discovered information. Would the auditor do that in the first place? That would be something the client would do, so we can eliminate that already because the auditor is not responsible for pro forma financial statements. Determining whether a person is relying on or likely to rely on the financial statements who would attach importance to the information. So let's think about this. We find out that there's new information. We're like, okay, how relevant is this information? And the client tells us it's not relevant at all. Nobody cares about this information. All right. We look into it as auditors and say, yeah, the client's right. Nobody cares about this information. Do we need to add it to the audit report then? No. Or to the financial statements? No. Okay. If it's not relevant to anybody, then there's no point in including it. So B signatures looks like a good answer, okay? Give public notice, auditors no longer associated with the financial statements. Now, this is a possibility if we come in and say, hey, look, there are people who are relying on this information. We've got to audit this information. And the client then tells us, no, we're not going to allow you to do that. If that happens, then we absolutely would go to this step right here. But we're putting the cart before the horse here, okay? First, we have to establish, are there people who rely on the information? And then we have to say, client, we got to audit this. That's the only situation in which this can arise, because if the client then says, no, we're not allowing you to audit this, then we would say, okay, you can't use our financial statement anymore. And we're going to tell everybody that you're using our financial statement when you shouldn't be. Request that management disclose the newly discovered information by issuing revised financial statements. Seems like an extreme measure if nobody's relying on it. So I think this is our first step. This might be our second step if we determine that it's necessary. But B is going to be a pretty easy answer. All right. Two more questions, then we'll take a break. 53. Quarterly data required by the SEC registration SK have been omitted. Which of the following statements must be included in the audit reports? Okay. This is a really, really silly question because you look at this answer and says, I don't know what it is. And I'm just struggling. There's got to be some sort of complex answer. Keep it simple. Okay. Let's look at the answers and see if it's just a reasonable approach, okay? The auditor will review the selected data and then review the subsequently forwarded financial data. Did we say anything about that during either of the audit courses that you guys are taking collectively? No, okay. So is it possible it's an answer? Yes, but we're not going to latch onto that because we don't know that that's an answer, okay? The company's internal control provides an adequate basis to complete the review, okay? That really kind of defeats the purpose of internal control for the first place. If we say control is going to be our basis for quarterly reviews. So yeah, we're just going to go ahead and say that's probably not correct, but we'll hold on to that. The company has not presented the selected quarterly financial statement data. What do you guys think about that statement? Is that an accurate statement? That statement is 100% accurate. There's no reason why we couldn't use it. I'm just kind of like, well, this seems too simple to be correct, but it's a correct statement. So let's look at the last one. The auditor was unable to review the data. Well, that's also possibly a correct statement, but it's actually that's not something that we would actually disclose in the information, okay? So C and D are both correct statements, but if we're going to tell you to disclose the information, then we would not say the auditor was unable to review the data because the data was never provided in the first place. So we're going to say C. That's all there is to it. Keep it simple. If you run into a question like this one, and you're just like, I don't know what the proper approach is, keep it to the simplest possible answers you get. Don't try to make up things that you've not learned, okay? If you answer C or D to this one, I would have been happy with this one because either one of those is going to approach. If you tried to answer something else, then you're trying to make things a lot more complex than they need to be. All right, last question before break, or actually last questions before break. Sorry, I said two questions. I've got two more questions after this one. My apologies. Don't riot. All right. Auditors report on financial statements prepared in accordance with another comprehensive basis of accounting should include all the following except, okay. Let's go ahead and go through the answers. An opinion is whether the basis of accounting is appropriate under the circumstances. So Is that what our judgment to make? Is if the client prepares the financial statements based on an accounting framework, are we supposed to make the judgment of whether that accounting framework is correct or is appropriate? No, our job is to audit the financial information based on that framework. So A is our answer, but let's go through the rest. Reference the note of the financial statements that describes the basis of the presentation. So if we're using something other than GAAP, that does need to be included in the financial statement notes, okay? A statement of the basis of presentation is comprehensive based on accounting other than GAAP. Yes, that is a correct statement. That needs to be included in the audit report as well. And then opinions is whether the financial statements are presented fairly and conforming with other basis accounting, comprehensive basis of accounting. Well, considering we included that statement that are prepared for, fairly in conformity with GAAP in other situation, it would make sense that this would be included as well. So B, C, and D are all very sensible. A is our answer. All right, last one before break. I promise you this is the last one before break. I'm not going to throw any last ones for. All right. An entity prepares its financial statements on its income tax basis. A description of how that basis differs from GAAP should be included in the. We actually just talked about this in the previous question. Does this go in the audit report or in any other ancillary item? No, this is the client's responsibility to explain this in the financial statements. This goes in the financial statements. So not in the representation letter, not in the engagement letter, definitely not in the audit report. This difference between that and GAAP needs to go into the notes to the financial statements. All right, let's take about, we'll say a 7-minute break. Okay, 7-minute break. Be accurate, 10:16.
I went there like I was.
I took a reg the day after Memorial Day. And so on Memorial Day, I even drove down. I was like, I scoped it out. I'm like, this is where I'm gonna park. This is where I go in at. Like, I know where I'm at. I can get from here to my house. I don't need a GPS or nothing. Like, I go.
Man's a plan.
I think it costs $360. I'm like, I don't want to take this again. I don't want to show up and not have my notice to schedule. I mean, I'd just be sick.
Schedule in my car. I printed it out at my friend's house down the street from me, and I just put it in my car and left it on my passenger seat for like a week. I'm like, this is just staying right here. I had my bag packed and ready to go for that morning. I was ready to just on out of there.
All right, so for module 2, or for chapter 2, A2, the good news is I don't think there's nearly as much work to be done in this area. Performance in this area seemed really, really strong overall. I would definitely spend more time focusing on A1, getting the knowledge there. And again, that's some of it's going to be fairly unfamiliar. I think honestly, A1 through A4, most of you should feel somewhat acclimated to the information. A5 and A6 are going to be the ones that are going to seem somewhat foreign to you. But for overall, things look pretty good in A1 and A2. A2, definitely good. I did not have a lot of issues that I had to run through. So the stuff that I'm going to cover is kind of the low-hanging fruit, including some questions that I'm just kind of like, do not worry if you encounter, or do not worry if you encounter questions like this in Becker. You will not encounter this on the CPA exam. All right. Which of the following is not a required part of the understanding between the client and its auditor? Okay. So managed responsibility to adjust the financial statements if the auditor identifies material misstatements. All right, so let's talk about this. Does management have responsibility to make adjustments if the auditor identifies material misstatements? Yes, they do. Okay, so this is probably something that's going to be included in the understanding. What about management responsibility to correct deficiencies in internal control provided by the auditor? Does management have responsibility to correct deficiencies? Boy, that sure sounds like it, because you think, well, material misstatements, deficiencies as well. The answer is no, they do not have responsibility to correct deficiencies in internal control, okay? Keep in mind that we can bypass internal control as long as the financial statements are free from material misstatement. That's all that matters. The internal control is ancillary, and especially if we're talking about a non-issue audit, it is not a required part of testing. So that's going to be something that we need to keep in mind. So it sure sounds like it's a good answer. It's probably something management should do, but it's not part of their understanding. So B is our answer. All right, moving on. BCC. If the predecessor auditor refuses to give the current auditor the non-issuer access to the documentation, what should the current auditor do? All right, so before we look at the answers here, this is another of those questions that we need to think about. Is this a problem? Okay, so would we like to have the predecessor auditor's documentation for audit? Absolutely, would make our job so much easier. What if the predecessor auditor says, I had a contentious relationship with a client, and I'm just kind of like, anything I can do to make their job life miserable, I'm going to do. So no, I'm not giving you my audit documentation. Is that okay? Yeah, that's the predecessor officer's prerogative. It's their documentation. If they say, we're not going to share it, yeah, that's fine. So the answer to this question is, we as the successor auditor, we're going to cry, okay? Because our job is made much harder. Now, once we get past crying, what is it that we can do, okay? So we're not going to disclaim an opinion because we don't have a scope limitation, because again, that's not something that's required as part of the audit. Should we discuss the matter with client's legal counsel? That's probably a bit of an extreme issue. We can't actually legally enforce the predecessor auditor to get the documentation to us. There's no requirement to do so. Withdraw from the engagement.
Does that happen much? Sorry.
It happens occasionally, not very often, but it's something that happens. And then review the risk assessment, opening balance of the financial statements. That seems like the most reasonable approach. Like, okay, well, we're starting from scratch, so let's start from ground zero. Let's review the risk assessment of the opening balances. Which of these accounts balances are going to represent the highest risk in the engagement? So D is our answer. All right. Yeah. Yeah, it doesn't happen very often, but contentious client relationships, like especially when the auditor leaves, like the client fires the previous auditor, hires a new auditor, the previous auditor may say, well, I'm not going to do anything to help you out. So yeah, so it's petty, but yeah, it does happen. Not very often. Which of the following is an element of the CPA firm's quality control system that should be considered in establishing quality control over policies and procedures? All right, so here's the deal. There is a mnemonic for this. There's an acronym for this. It's called Help Me, okay? All I'm going to tell you is I think you should review those letters that are in there. And this is an exception here. I meant to bring it up and I forgot, but I will say I've been teaching this for 10 years, and the only one out of the 6 letters that I've ever seen is the first letter, which H stands for human resources, okay? So issues involving personnel come up frequently. I'm not going to say it's the only one that may come up on the CPA exam, but I've been doing these reviews for a long time, and this comes up constantly is that first letter, human resources. So assigning personnel to engagement, that's the answer, okay? That's the first quality control, first letter of quality control, and that's probably where the low-hanging fruit is. You may encounter other questions that are at the other letters in there, but I've not encountered any yet. So it just seems like this is one of those questions that they ask very occasionally, and it's always the same stuff. All right, 6231. Which of the following statements is most accurate regarding audit documentation requirements? Okay. The auditor should document findings that result in a modification of the auditor's reports. What do you all think about that statement? Does that sound like a reasonable statement? So we basically start out with an unqualified opinion. We do our testing. We say, oh, this is problematic. There's a departure from GAAP here. Looks like we're going to have to issue a qualified opinion. Should we document the reasons for that? Absolutely. Okay. That seems like a no-brainer slam dunk right there on A. Okay. But let's look at the rest of the answers. If different audit procedures are performed due to a lack of responsiveness by the client, the lack of responsiveness should not be included in the working papers. So let's just do a shorthand. When we talk about documentation, there is very rarely going to be a question where they say, do not include this in the working papers. Okay. The more information you can include in the working papers, especially if it's not proprietary client information, it should be included in the working papers. In fact, I've not seen a question yet where it said, don't throw this in the working papers, okay? The only information we do not include in working papers is information that's not prepared by the auditor, does not belong to the auditor. If it's something the auditor prepared, that should go in the working paper, and this is definitely something that should go in the working paper. So B is not our answer. If an oral explanation serves as sufficient point for the work or performed, that explanation should be documented in the working papers. This is kind of a tricky answer. Is an oral explanation ever sufficient on its own? So oral evidence is observation inquiry. What do we know about observation inquiry? They're very low reliability forms of evidence. Usually they require corroboration. Very rarely are oral evidence going to be sufficient. So oral evidence is not going to be sufficient in this situation. So we can toss out C pretty easily. The results of audit procedures indicate a need to revise the previous assessment of risk. The new assessment should be documented, and the original assessment should be removed. We were so close until that last statement, okay? That last statement kind of threw it askew. We do not ever eliminate things from the working paper. Very rarely does things get thrown out from the working paper. If something has changed, then both the original information and the new information need to be included. So A is pretty clearly our answer. All right. 2960. All right. My favorite topic to talk about. Oops, 2960. Old man, I can't keep up with this. COSO internal framework. Yay! All right. Objectives of an entity include, okay, so we're talking about control objectives and the COSO objectives. What were those again? So we had 3 of them. Reliability of financial reporting, compliance, operations. So effective, efficient operations. Yeah, so reliable financial reporting and effective, efficient operations. We've already known those are 2 of the 3. And the other one's compliance. Does this say compliance here? No, it says information and communication systems. Information communication is a component, not an objective. It's a component of a control quality control system in that case. So the answer is no, yes, yes, A. All right. 3060. The monitoring component of internal control excludes. So we're saying, what do we not do with responsibility monitoring? This is actually a pretty tricky question. So let's walk through this, okay? Assessing information derived from external parties. So remember, monitoring is looking at existing controls and determining if they need to be updated to address new risks or new issues with their surrounding environment, okay? Would we assess information derived from external parties to do something like that? Absolutely. Client says, hey, did you hear about this whole COVID pandemic thing that might actually change the scope of the planet as we were operating on? It says, no, that's good information to know. Thank you very much for sharing. That might actually affect the risks that we're subject to. We probably should address those. Assessing the quality of control performance over time. By definition, that's something that monitoring does. So B is also a correct answer. Improving controls that are not operating effectively. That's something we want to do. Yeah, if the controls are no longer operating effectively, we want to make sure that we fix the controls to make sure that we improve them so they can operate effectively. Eliminating controls that are not operating effectively. Okay, you know what? This bridge is starting to become dilapidated, so I'm just going to knock it down and not rebuild it. Yeah, that kind of defeats the purpose. We don't eliminate controls, we fix the controls that are in place. We want to make sure the controls themselves are working. We don't just say, all right, well, you know what? You skinned your knee, let's just chop the leg off. You know, yeah, that seems like kind of to defeat the whole purpose of it. Okay. We do not authorize that. We do not authorize that. So D is our answer. We're not going to eliminate controls. All right. 14815. The company has established and communicated baseline expectations for performance of all employees. The company's action demonstrates a focus on which of the following components of the COSO internal control integrated framework. So this one's a tricky one. All right, this one's a tricky one because you see the word established and communicated, and you're just kind of like, oh, that's establishing main expectations for internal control, what everybody's responsibilities are. So this is obviously information and communication, right? It's a trick question. It's a trick question. I don't like the wording on this question. I really got antsy when I started answering this question. So like, well, this is the company itself actually setting baseline expectations. So this is the people at the very top saying, here's what we want you to be able to do for controls as an organization. This is our organizational expectations. So it's the tone at the top. What is the tone at the top called?
Control environment.
The control environment, okay? And if you look at the explanation for it, it basically says, if you are looking at information communication, we're talking about the identification, capture, and exchange of information. So the actual parts of the controls themselves, not the expectations for control behavior. Now, this is a tricky question. If you didn't get it right, don't feel bad, okay? I second guessed myself many, many times on this one before finally clicking control environment, okay? So this one's one of those ones that I think this would be this is AICPA authored, and this is really, really antsy to me. So make sure that you have a good understanding of what each of the components of internal control are, and make sure you read through the questions and see what they're really, really asking. Yeah, this is AICPA authored. I think this is one of those AICPA questions that they put on an exam, and people just put information and communication, so they never actually used it for an exam. Otherwise, it would say that it was used on an exam previously. At least that's my belief. That's my belief, and I'm sticking to it. Move on to planning. All right. Holding other planning considerations equal, a decrease in the amount of misstatements in a class of transactions that an auditor could tolerate most likely would cause the auditor to what? All right. So these types of questions will come up a lot. All right. These are audit risk model questions. So let's talk very quickly about the audit risk model to make sure everybody's clear on what they need to know. So audit risk is a function of 3 things. Does everybody remember what those are? Inherent risk, control risk, detection risk, okay? So audit risk is generally going to be a constant. It's going to be set at low. We could say very low, all right? We establish what a client's existing inherent risk and control risk are as an auditor. We go in and evaluate that. We say their inherent risk is generally going to be high. And I will tell you right now, we can pretty much say that inherent risk is going to be a constant for all of the examples that we're going to look at. Simply because it's not an interesting example if we say inherent risk is low, okay? It's like, why are you getting out in the first place if inherent risk is low, okay? So inherent risk is generally going to be high too. Control risk, remember, control risk is the risk that a misstatement will not be captured by the controls. Control risk is going to be variable, depending on what we establish with respect to controls. That's kind of the interesting one. Combined together, inherent risk and control risk are called risk and material misstatement. Does everybody remember that? Remember that image that I used to put up on there, Club RMM with DJ double I? DJ Dr. Iceland, yeah, all right. So risk and material misstatement actually determines what is the risk the client's supposed to misstatement. And we're going to talk about that here in a second because there's a trick question coming up here in just a little bit. But when we think about risk and material misstatement, the higher risk and material misstatement is, the lower our detection risk is. Now that sounds like a good thing because remember we say detection risk. Well, it's a risk. If it's low, that's got to be good. Detection risk is one of those really weird concepts where low detection risk is a bad thing because it represents our appetite for risk. If we have low detection risk, that means that we can only tolerate a little bit of risk, okay? A very little bit of risk, meaning that we've got a lot of work to do, okay? We've got a lot of work to do. Conversely, if we say risk and material misstatement is low, that means our detection risk is high, which sounds bad, but it's not. We like high detection risk, that we got an appetite, very high appetite for detection risk, meaning that we don't have to do a lot of work, okay? The easy way to think about this, and this is going to be true in most of the situations, is that the reliability of controls or the effectiveness of controls is going to be inversely related to the detection risk, which is also inversely related to the amount of work that you do. That means that control risk is usually going to be directly related to the amount of work that you do. Now, I realize that's a lot to absorb in a very short period of time, but let's think about this logically, okay? Let's assume that you go into a client's establishment and you look and you say, okay, I'm going to test the controls, and you test the controls and the controls are immaculate. Okay, they've got the best controls ever. What does that mean about the rest of the work that you're going to do as an auditor? Probably not a whole lot because you can rely on the client for that work. Does that make intuitive sense? Yeah. So direct relationship between control risk and the work that we do during substantive testing. That's what we're looking at right there. What about if we go to a client site and their controls suck and we can't rely on any of their controls? What does that mean about the work that we have to do to follow up? A lot of work. Control risk is low, or sorry, control risk is high because their controls stink. Control risk is high means that the amount of work that we do is also going to be high. Okay, so that's going to be something that we consistently see. So understanding the audit risk model relationships are really, really important for answering questions like this. So in this one, we're saying a decrease in the amount of misstatements in a class of transactions that an auditor can tolerate. So what is that saying? We have a lower tolerable misstatement, a lower amount of misstatement that we can tolerate. Is that a good thing or a bad thing as an auditor? If we have a lower tolerable misstatement, are you happy or sad about that? I'm sad. I'm very sad. I'm just like, this sucks. Yeah. So this means that we have to gain more assurance in other areas. Okay, we have to gain more assurance in this area because we can only tolerate a lower level of misstatement. So you need to be thinking when you read this question, I'm going to have to gain more evidence. I'm going to have to do more work to gain more assurance. All right. Decrease the extent of auditing procedures to be applied to the class transactions. Is that consistent with that expectation? No, that says decrease the extent. We want to increase our procedures. Apply the substantive test prior to the balance sheet date. If we test before the balance sheet date, do we get more or less assurance? Less assurance. Remember, we get less assurance if we test before the balance sheet date because we don't have all of the available information we need. So this is a lower assurance thing. Perform the plan audit procedures closer to the balance sheet date. Does that give us more or less assurance? More assurance for the same reason that this one gives us less assurance. This is going to give us more assurance. Increase the assessed level of control risk for relevant financial statement assertions. We don't change control risk. We wouldn't assess control risk. Our assessment of control risk is independent of our assessment of material misstatements, and we don't actually change control risk. We only change our assessment of control risk. So this is not relevant. So C is our answer. By the way, there will be questions for sure on the relationships between the components of the audit risk model and external components there. Make sure you have a good understanding of that, because that will come up time and time again in your questions. In fact, I think I've got a few more questions in this area. 7604. Which of the following would not be a primary functional audit strategy? Okay, so the only reason I brought this question up is simply because it's a misleading question, but I do want to talk about the very nature of audit strategy. When we talk about strategy, the strategy and plan tend to use synonymously, but they're not the same thing, okay? Audit strategy tends to be very, very big picture about the audit as a whole. Audit plan tends to be more detail focused. So when you see a question like this, you should be thinking, if I'm talking about strategy, I'm looking at really big picture issues, okay? So let's go ahead and go through the answers and see, is this big picture or is this detail focused? Obtain or outline the nature, extent, and timing of audit procedures. Is that big picture or is that detail? We talk about individual procedures, that sure is like detail, okay? So that's probably not related to strategy, and that is in fact our answer, by the way. Tink. Okay. Provide a preliminary assessment of materiality and tolerance statement. That's big picture. Provide the scope of the audit. That's big picture. Outline reporting objectives. That's big picture. Okay. The only reason I bring this up is if you see a question like this, make sure you delineate audit strategy from audit planning. Audit strategy, big picture. Audit planning, details. Okay. Which type of audit procedure would an auditor use to test a client's financial statement assertions at the account, transaction, or disclosure level? This one is kind of a silly question, okay? So remember we talked about the categories of assertions. We said that there's two categories of assertions. There's transactions and events and account balances. And embedded within those are disclosures, because disclosures are relevant to both categories of assertions, okay? So now, if you remember, we talked about one of those categories of assertions is relevant to test of controls. Does anybody remember which category of assertions are relevant to test of controls? It's transactions and events, okay? Controls relates transactions and events within an organization, the day-to-day operations of the organization, okay? What about substantive audit procedures? Are those relevant to are those relevant to transactions and events? The answer is yes. Are they relevant to account balances? The answer is also yes. Substantive audit procedures can actually cover both categories of assertions. So by definition, substantive audit procedures can cover account, transaction, and disclosure level, okay? They can cover all three. Test of controls only cover account balances and disclosure level. Now, the wording on this is a little bit sus, all right? I'll be honest, okay? If it says account, transaction, and disclosure level, the answer would be substantive procedures only, because those are the only types of tests we can use to cover all three of those transaction types areas. But it doesn't say that. It says account, transaction, or disclosure level. If that's the case, we can do both substantive procedures and test of controls, because test of controls operate at the transaction and disclosure level. All right. 16. The company being audited has an internal auditor that is both competent and objective. The independent auditor wants to assign tasks for the internal auditor to perform. Under these circumstances, the independent auditor may. Now, first of all, to answer the question that you're going to have to answer with respect to internal auditors, internal auditor needs to be both competent and objective. And if you're talking about PCAOB guidance, they also need to use a systematic and disciplined approach. But once we've established that, we can rely on the work of the internal auditor. The important thing to note about the internal auditor's work is the internal auditor can perform tasks for us. They may not perform judgment for us, okay? They can perform tasks, they cannot perform judgment. We have to actually be the end judgment as we're the ones who are providing the opinion, determining the implications of the results, okay? So when you're looking at a question like this and you're saying, okay, this has to be a task or it has to be a task-oriented answer, it cannot be a judgment answer. So allow the internal auditor to perform analytical procedures, but not be involved with any tested details. Well, the internal auditor could technically perform analytical procedures, but it really seems to defeat the purpose. By definition, an internal auditor may perform test of details, okay? That's actually one of the things we would do, we would have them do is actually perform those test of details. Allow the internal auditor to perform test of controls. That actually would be another task. So another series of tests that we could do. So test of controls, test of details. Not assign any task to the internal auditor because the internal auditor's lack of independence. Remember, the whole purpose of us establishing that they are competent and objective is so they can actually do work to help us, to assist us in our task. So we can toss out C because we've established competence and objectivity. Allow the internal auditor to audit a major subsidiary of the company. Now, here's the problem. Audit by definition implies judgment and applies some sort of professional judgment on the part of the internal auditor. They can perform tasks, they may not audit, okay? They can't actually provide that judgment. So D is out. So we tossed out A, we tossed out C, we tossed out D. B is the only one that we said was seems pretty good. So B is our answer. Management of a non-issuer engaged an actuary to calculate year-end assets and liabilities because the employee's pension plan. The actuary's report provided year-end balances that were consistent with the balance reported in the non-issuer's year-end balance. In the situation, the auditor would most appropriately do what? Now, this one is kind of related to the idea of the internal auditor. When we use the work of specialists, we have to make sure that the specialist is actually capable of doing the work that we ask them to do, okay? So let's say that an actuary comes in and says, I've done this work, and then work looks good. We have to make sure that we understand the basis for the work that was done and that they were qualified to do it, okay? The same way that we would establish competence and objectivity for an internal auditor, we want to establish the same type of competence for an actuary, a specialist that we would hire. So if we're very in agreement with the actuary detail the nature, scope, and objective of the work performed, no, we don't need to do that. So that's probably something that's been done previously. Recalculate the pension plan assets and liabilities using the original source data. If we're doing that as auditors, why do we hire the actuary in the first place? That doesn't make sense. Evaluates the nature and level of expertise of the actuary. Does that seem consistent with what we were just talking about? Yeah, C is probably our answer. Conclude the pension plan assets and liabilities or accounts are free from material statements. Well, that doesn't actually say that, so we can't actually make that conclusion. So we're going to say C, evaluate the nature and level of expertise of the actuary. All right, let's move on to one of my favorite things to talk about, good old materiality. Which of the following statements is not correct about materiality? Gosh, I hate questions like this. I hate questions that you can't make any adjustment or such assumptions moving here. The good news is we've seen this question before. So let's read through the answers. Auditor's consideration of materiality is influenced by the auditor's perception of needs that a reasonable person will rely on the financial statements. What do you guys think about that statement? Is that a correct statement? That is an accurate statement, so we can toss that out because it's not correct about materiality. A is correct, so it's not our answer. Materiality judgments are made in light of surrounding circumstances that necessarily involve both qualitative and quantitative judgments. That is true too. So it's either C or D. And the interesting thing is C or D. Okay, sorry. C is auditor considers materiality for the financial statements in terms of largest aggregate level of misstatements that auditor can be material for any one of the financial statements. I want to hold on to that one because that seems really, really confusing. It sure sounds technically correct, but I want to look at that. The concept of materiality recognizes that some matters are important for fair presentation for fair financial statements and can forward the gap while other matters are not important. What do you guys think about D? D sure sounds like a good one here. So it's probably C, but why is it C? All right. Well, it says largest aggregate. The word that we want to use is smallest aggregate. So why is that the case? All right. Let's say that I'm trying to determine materiality for this classroom. We are all users of financial statements, and I want to determine what is our user financial. It's like, okay, we're trying to determine what misstatement would cause us to panic. And I say, all right, your bank account is misstated by $1. Would that make you panic? And somebody's like, and Tyler's like, no. Yeah. Lotus is like, no. And it's like, no. And it's like, no. It's like $10. Tyler's like, no, bro, I got tons of money. Okay. And it's like, I'd be a little bit worried. Lotus is like, yes, $10 is big. So basically, we try to actually ramp up until we hit a point that is our smallest point, okay? And that's going to be the objective that we use, that smallest level. If we get any higher than that, it doesn't matter because we've already established the lowest level of scope, okay? So let's say Tyler is secretly a billionaire, okay? And he's like saying, I don't care unless it's like misstated by $1 million, okay? Everybody's gonna be like, I don't have $1 million in my bank account, Tyler. Come on now. We can't use the largest level, okay? Because all of us are not gonna be the same. We have to use the smallest level, whatever that smallest point is. Okay. Didn't mean to leave you out there, Matt. You're important. Your materiality assessment is important too.
Gotcha.
I assume your materiality assessment is just like spot on. It's like
Yeah.
the Price is Right type
Yeah.
of materiality assessment. All right. Here we go. 4696. All right. You will notice this one does not have the AICPA authored here, and there's a reason for this, because this question sucks. All right. So the only reason I bring this question up is that I want to make sure that everybody's clear. I actually picked this up when I was reading this question. I was like, oh my gosh, I know what they did. And I know why people miss this question, and it's so cheesy, okay? The only thing I want to make sure is that when you're reading through these multiple choice questions, I know that you're going to be tired and I know that you're going to be worn out. Make sure that you absorb every piece of information. And the real critical piece of information, I'm not even going to go with this question, so I'm sure everybody answered this question. It's just like really real critical piece of information is for the period 01, 01, year 2, 06, 030, year 2. It seems so arbitrary to do a half a year, okay? But they said gross annualized revenue, which kind of is a clue that something's going on here. So you have to annualize the revenue amount, which the annualized revenue would be 4.2 million, and then you multiply that times 1%, which is 42,000. Okay. This is not a question to value out. Like if you miss this question, you should slap Becker, okay? Not yourself, okay? But be very, very careful. I don't think this is going to happen on the CPA exam. I don't think that they'll throw a question like this on the CPA exam. But you do need to be consistent in reading, making sure you get all the detail. This one's a sucky question because it's so long that you're just kind of, just finish the question already. I've got 40 other questions to go before I finish this section, and I just want to finish this multiple choice question. Yeah, be very, very careful. Make sure you know the dates and the ranges of it. But that's all I'm going to say in here. Yeah, so by the way, 42,000. When I saw this one missed, and I said, this is weird. Why did everybody miss this question? It's like, oh, because the annualized revenue. Yeah. 2867. All right, here's auto risk, another auto risk model question. The acceptable level of detection risk is inversely related to what? So acceptable level of detection risk, remember, we determine detection risk by our risk of material misstatement. If risk of material misstatement is high, what is detection risk? Low, okay? Risk of material misstatement is low, detection risk is high. So we know it's a risk of material misstatement, but also detection risk determines the work that we do during substantive procedures. If our detection risk is low, we're saying we have a low appetite for risk. We got to do a lot of work, okay? Conversely, if our detection risk is high, then we're going to say that we've got a very high tolerance for risk. We have to do very minimal work, okay? So, preliminary judgment about materiality levels? No. Risk of misapplying auto procedures? No. D says risk of failing to discover material misstatements, okay? Is that the same thing as risk of material misstatement? No, okay, that's not the same thing. If anything, the risk of failing to discover material misstatements would basically either be the same thing as detection risk or control risk, whichever one you want to categorize as. But it's not the same thing as risk of material misstatement. This is one of those ones that's another tricky question because it has the words that are in there, and they do that occasionally. But make sure you read it. It's not the same thing. One thing that's very clear, though, is the assurance provided by substantive test. If we have low detection risk, we have very small appetite for risk, and we know that the assurance that we have to gain from substantive procedures has to be very, very thorough. So that is consistent with that inverse relationship. So C is our answer. The answer D, don't feel bad. That's a really tricky question, but for the most part, we want to make sure we have absolute questions and not kind of questions where the wording seems a little bit suspect. I was going to say sus again, but I only get one sus a day, so. Too old to using Gen Z's. When an auditor increases the planned assessed level of control risk because certain control activities were determined to be ineffective, the auditor would most likely increase the what? Okay, so basically, we think control risk is going to be moderate. We do some testing and say, you know what, controls really aren't that good. We're going to set control risk at high. What is that going to change? Okay, so this should be pretty obvious based on what we just talked about. Okay, it should be what we just talked about. But basically when we talk about the control activities is going to be likely increase. So the increase what? So let's go ahead and work through. First of all, level of inherent risk. Do we change inherent risk based on control risk? We don't actually ever change inherent risk at all unless we get new information that allows us to change the assessment of inherent risk. We don't have that ability. The extent of the test details. Okay, so control risk goes up. Would it make sense that if control risk goes up, that the work that we have to do later on is also going to increase? Yeah, so B is our answer, but let's work through the rest. The level of detection risk, okay? So control risk goes up, risk of material misstatement goes up. What happens to detection risk? goes down. Okay, so it's the opposite direction. It would actually not increase, but it would decrease. Okay. The extent of tested controls. So we test controls. We say controls are not that good. Does it make sense to perform more tested controls? Not really. We've already made our establishment of control risk is, okay? We don't change our tested controls once we've already performed those controls. So the D is not our answer. So extended tested details. All right, 6155. We're almost done, guys. 2 more questions. As a result of control testing, a CPA has decided to reduce control risk. What is the impact of substantive testing sample size if all other factors remain constant? Okay. So control risk goes down, all right? Now, let's just go ahead and for posterity, let's just go ahead and talk about the effects on the auto risk model. Control risk goes down. What does that mean about risk and material misstatement?
Goes down.
Goes down, okay? Risk and material misstatement goes down. Detection risk goes up, okay? Detection risk goes up. Substantive testing goes down, okay? So the assurance we need from substantive testing is minimal. We don't need as much assurance from substantive testing. Does that articulate to you that you would need larger samples or smaller samples in testing?
Could be smaller samples.
Smaller samples, yeah. So our sample size would need to be lower, okay? Which makes sense. If we don't need as much assurance, we probably don't need to do as much testing. So sample size would be lower. Again, it's like a Rube Goldberg machine. You guys have seen those Rube Goldberg devices? When you hit one point, it's going to affect everything else. So make sure that when you hit one point in the Rube Goldberg device, you know how all the other points are affected. Some will be unaffected, some will be very much affected, especially the stuff at the end when we start talking about control risk, detection risk, and sample or substantive testing. Those are all interrelated, and it's important to understand those relationships. All right, one question on fraud risk, and then we're done for the day. When performing a substantive test or random sample of cash disbursements, an auditor is supplied with a photocopy of a vendor invoices supporting the disbursements for one particular vendor rather than the individual invoice. The auditor is told that the vendor's original invoices have been misplaced. What should the auditor do in response to this situation? So has fraud occurred? We don't know. We don't know. This is not an indicate. This is a suggestion there may be fraud risk, but this doesn't mean that fraud has taken place, okay? So this is where we're going to be taking a very wary approach. When you see a question like this, you don't automatically disclaim the sky is falling or this is going to be an adverse opinion or we're going to arrest the client. This is where we start stepping warily. This is where when you read a question like this, that all right, something is going on here that I'm not sure about. I need to take additional steps to actually gain more assurance and more information. All right. So let's go ahead and go through the answers. Increase testing by agreeing more of the payments to the particular vendor to the photocopies of the invoices. Does this make sense to do? Because let's assume that the invoices have been altered and the photocopies of the invoices are the alterations. Would agreeing them to the photocopies and more information, would that provide me additional assurance? No. The problem is the photocopies themselves, okay? So this doesn't make any sense. Count the missing original documents as misstatements and project the total amount of error based on the size of the population and the dollar amount of the errors. Is it a misstatement? We don't know, okay? This is what we're trying to establish. We can't just say, oh, it's a misstatement. We're not accepting this. Increase the randomly the number of items in the substantive test to increase the reliance that may be placed on the overall test. So we actually increase our testing and that gives us more photocopies of invoices that we have to test. Does that help us at all? No, again, getting more information is not going to help us here, especially if the information is flawed in the first place. What we're trying to establish is what is the deal with the photocopies of the invoice? Why do we have these in the first place? So we're going to reevaluate the risk of fraud and design alternate tests for related transactions. We can't rely on the photocopies anymore, so we need to find another way to get information in this area because the photocopies are just not sufficient evidence the way that we use them. So D is our answer. This is a tricky roundabout question, but again, make sure you read through all the answers to see if they make sense given the context of the question. All right, well, we didn't have time to do any of the task-based simulations that I had set aside, but that's okay. I'm sure you'll have plenty of time to work on your own. We are meeting again on Monday at 9 a.m. In between now and then, if you're working through A3 or A4 or even A2 or A1, if you're working through any of the sections and you have questions that you want me to bring up and talk about when we come back on Monday, or if you just need clarification, send me an email. I'm more than happy to set up a Zoom call with you anytime in between now and then. Again, keep in mind, we're here to try to assist you, to try to make sure that you understand and feel more comfortable. So I'm happy to do whatever's necessary. But if you have questions that you encounter, you're like, Dr. Barnes, I'd really like to talk about this question. If it's a task-based simulation or a multiple choice question, just send it my way and I'll bring it up and we'll talk about it on Monday. Have a good weekend, and I'll see you all in a few days.